Day in months. Let's get their next move with the Trading Nation team. Rich Ross with Evercore ISI, Max Wolff with Manhattan Venture Partners. Max, is this just sort of a short-term pop? Because a lot of people have been proclaiming this space dead, especially with what's going on in the campaign trail and a lot of knocking of the pharma and biotech sectors. Or do you think this is a real turn to the positive for that group?
So, look, I think both Friday and today are a huge grain of salt on anything, just because it's sort of trying to decide whether the sun will always shine or if it's going to rain sometimes, and you get a little bit of panic. What we do think about the sort of biotech space is it's a way to hunt for yield that's not macro directionally correlated. So it's where you go if you want to take a big risk and give up your liquidity, but you need high returns long term. A little bit like venture, but a little bit less cyclical. So we do think it's going to have its moment in the sun. Do you think it's going to be a big area for capital in the future? That being said, it's not really a deal, and it's going to continue to be very much a victim of anything to do with rate jitters.
Okay, well, today, no rate jitters, and so biotech is up. Rich Ross, strip out all the emotion. How do the charts look on biotech?
Yeah, to Max's point, look, biotech, Brian, it's been a big disappointment this year. In a year in which just about everything has gone higher, this is the worst performing sector here in the U.S., down 15% year to date. Bring up the chart. I'll show you why I think it could actually get a little bit better here for biotech. When you look first at that daily chart, you can see that protracted downtrend, but most of that 15% decline happened in just the first couple weeks of trading this year. Since January, we've really been moving sideways, building a nice base of support, and just last month, we break out from that base of support. Of course, that breakout proves false. We fall back into the pattern here along with the broader market. But look, Brian, the 50s crossed back above the 200-day for the first time since last October. And I think that breakout will prove premature. And once again, we will reassert ourselves to the upside. We might be seeing the start of that today. If we zoom out real fast, I'll show you where you stop yourself out on this trade and conversely, where you get more excited. Look at that long-term 200-week moving average providing support for over the last 5 years, comes in around 260. Below there, all bets are off in biotech. I actually think until then, it does hold, and we can move higher here. You take out the 50-week, that's your resistance, and you can actually get another leg higher here. So I kind of like biotech closer to the bottom when just about everything else is closer to the top.
But fair to say, Rich, quickly, that the next few days are going to be very crucial technically for the biotechs with that 250, correct?
Brian, I think the next few days are going to be pretty crucial for everything.
Well said. Rich Ross, thank you very much. Max Wolff, appreciate it, guys. For more Trading Nation, the always crucial site, website tradingnation.cnbc.com.